Welcome. Well, we're with our partner here, Ish and Ish, we've been working together for the last 12 months. There's lots of fractional ownership out there in the world, but you know, there's a difference between investing fractionally in quality assets and in rubbish.
Sure.
What attracted you to working with us?
I think one of the first things that you look for when making an investment is the safety, security, and transparency in whatever you bring on the table for all these investments. And one of the things that really struck me when I looked at the platform the first time was how safe, secure, and transparent this entire process was, and how it was being run on a global scale, not just on a regional scale, but on a global scale. I think that's what really attracted me. And all our investors, whether they are small investors or big investors, safety, security, and transparency are three words that go right through.
You know, I love that, and I think, Rian, I'd love you to talk, because a lot of people think that a fintech platform is just about the tech and investing, and there's so much more to it. Tell us a little bit, and again, I know you could talk for 3 hours on this, having architected the entire system. Give us the pricey version of how do we get that safety and security that Ish is talking about.
Yeah, indeed. So the first thing that we do is that we, there's high levels of compliance. There's about 4 levels of compliance that happens, which with investment structuring, I think the key point there is ensures that the marketplace is more about technology and you've got your compliance, your investment structuring and your legal. But the marketplace is not a free market. So we put vetted deals on platform. So in other words, vetted deals in terms of pre-approved partners or sponsors. And we take that very serious because our responsibility is for investors to make an informed decision, and hence the due diligence process is so important.
Talk to us about those 4 steps, the macro analysis, the micro analysis, the DD. It really is important for investors to understand the level of understanding in this industry. Technology, as I always say, is just the enabler, but you still have to have the fundamentals right.
Yeah, so if you talk about macro analysis, we talk about that as the spotlight or our thesis. So for us to be able to go and find the correct opportunities in the areas where there is drivers of return, what we do is we have identified the different drivers of returns for, let's say, industrial assets, logistic assets, multifamily assets, and so on. And then we run a macro screen where we then go and we zoom into the world and see where's those fundamental factors that support the returns. And that's where we go and we find partners and then, of course, investment opportunities.
And talk to us through those partners now. So now we've done the macro analysis, we want to be in industrial warehouses in America. What do we do next?
So the first thing that we do is we do quite a lot of in-depth due diligence or research on our partner or a sponsor. Because if we can trust our jockey, we know that there's a high chance of probability of the success of a deal, but more importantly, that the targeted returns will materialize. One thing, by the way, that we take very serious, because we offer reliability and predictability of returns. So if we go to an investor and we say we target X%, we want to make sure that the deviation is not too big or too large. But when we look then at the sponsor due diligence, there's 3 things that a sponsor needs to tick first before we even go further. The first thing is we look at their corporate governance and discipline. In other words, are their annual filings up to date? Their tax emissions, is that up to date? And so on. The next thing we look at is what's their financial soundness? So we look at their assets, does it cover liabilities? In terms of liquid cash, how many months of expenses can they cover through their liquid cash? Management accounting, financial statements, is that up to date? Why is that so important? Remember, what we do is we use an SPV or a special purpose vehicle to obtain exposure into an investment opportunity which is managed by our sponsor. So if our sponsor doesn't show corporate governance in their own business, there's a risk that they're not going to do it in the SPV, which put our investors at risk. From a financial soundness perspective, although we have external cash custody through Lemonway, Once the money is invested into the deal, our partner has control or access to the funds. And we need to make sure that they're not going to channel short-term funding for their operations using our investor money. And then the third thing that's critical to us is we do not create exits for sponsors. We need to make sure that our partners' interests are aligned with our investors' interests. So we want to make sure that they put between 5 to 10% of their own money in the form of equity into a deal. And then secondly,
that is so important. Get your partners to put money right next to your money.
Yes.
Yeah.
And then the second point is, if there is senior debt, in other words, we go to a bank to get finance for the rest, that they sign personal guarantees. So in other words, their own wealth is on the line.
Yeah.
And then the third thing is, there's something that we call a preferred return. So let's say the preferred return is 9. We first give investors a 9% return before the partner can start getting some of that excess cash flows.
Absolutely.
So if we've ticked those 3 things, we say yes, in principle, we can continue. Then we drill down a bit more during the due diligence, and I just want to mention a few things. So the first thing is we are dealing with specialists. We don't want to deal with a commercial real estate company that say they do industrial, multifamily, medical, and so on. We want to deal with a partner that focus and specialize in industrial, medical, and so on. The entity need to be in existence for at least 5 years. And it's quite important that the directors, or let's call it the principals, the core team, need to have at least a minimum of 20 years combined experience. But in many cases, that's almost like the absolute minimum. We've got an emerging sponsor on platform where the 2 partners got 45 years of combined experience, just to give you an idea. One of our other partners, Feldman, you're looking at 75% years combined experience. Then it's quite important for us to understand the team that's going to look after our clients' investments. What's their qualifications? Relevant qualifications. What's their relevant experience? But more importantly, the team doesn't have the depth to cover all the activities that they need to do in terms of property investment and property management to ensure we get the right outcome. And then the last thing we look at is track record. So in other words, how many deals have they successfully exited? If they haven't, if there's a deal that didn't go as planned, why and how did they change their process? And then thirdly, what's their track record in terms of returns? And there we look at how many deals that they do, what did they project, and what did materialize. We've got a partner, MAC, roughly 35 deals. Not one of the deals underperformed what they projected, either in line or better. Because as I said, we're not guaranteeing anything, but we offer reliability and consistency of returns. So that's in a nutshell how we do the due diligence on a sponsor. The key point there is the supply team does it, but then it goes to investment committee consisting of 3 members that approves it. Another level of governance and control. Once we have a sponsor, Scott, we then go into the different investment opportunities, and there's also a due diligence process.
And I think it's really important because we're not looking for fly-by-night sponsors. All of them are institutional, as Rian's already mentioned. We're looking for them to bring 3 to 4 deals a year to the platform. And if you think about it, if we've got 15 qualified institutional sponsors bringing 3 to 4 deals, that's 50 to 60 deals a year. That's more than 1 a week. That's more diversity than you and I as investors need. And it just gives you, so as Rian says, we go through that whole due diligence process. Ultimately, it gets down to the deal. Once the deal has qualified, then it ultimately goes onto the platform. And that's where, for someone like Ish and many of the partners that we've met here in Dubai and the UAE, what really astounds them is that to invest around the world in quality institutional assets, unless you had tens if not hundreds of millions of dollars, was actually impossible. Because you had to fly to America, you had to go and build all the relationships, then you had to fly to England, go and build all the relationships, fly to Europe. It's impossible. What Rian and the team have done is take all of those global relationships and bring them into one place where people can safely and simply invest, but with access to global opportunities in terms of that diversification. My last thing that I just wanted to talk to Rian is talk to us just about the 4 asset classes that we focus on, because we talk a lot about diversification. We diversify across countries, we diversify across currencies, we diversify across assets, and you're about to explain the assets, and we also diversify across partners within the assets. So you really do have true diversification across all markets.
Yes, Scott. So it's quite important. So maybe let's just talk about diversification between countries. So we currently offer deals in the US, Europe, UK will be coming online soon, Australasia. In terms of currencies, although we raise investor equity in dollars, and although they earn their return in dollars, but if you invest, let's say, in an Australian asset, the underlying currency is Australian dollar. If you invest in the UK, it's Great Britain pound. So there is diversification. But then in terms of the assets, we look at 4 alternative asset classes. The one is commercial real estate. The other one is structured notes, which provides predictable income. Then private equity or venture capital, and then ESG, green energy, alternative energy through things like solar panel investing. And I think what is just so important within commercial real estate, people think of real estate as residential and developments. That's not what we're about. We're about income generating real estate, and we break it down into industrial, logistics, multifamily or residential, office, old age care, medical, co-living, new economy. So even within commercial real estate, we are different because we like income generating assets, and we've got a broad base of alternative sub asset classes within commercial real estate.
Look, there's so much news. We've spent nearly 12 minutes talking about it. If you want to look, we can go much deeper. You can read the institutional due diligence reports, etc., etc. We've got all that documentation available. Ish, final comments in terms of, this is the first time that you've actually met Rion. We've been in meetings all week now with some of the most influential people, including the Sheikh's office, right through to some of the biggest wealth managers. How much comfort has it given you hearing and meeting people in the flesh, not only meeting Rion face to face, but actually meeting and seeing how others react to the processes we've got?
I think it's been tremendous to see first-hand reactions from on-ground people who would go and actually sell, who would interact, and be the front end, as they call it, the face. I think that's where the real confidence comes from. However, having said that, having interacted with Rian and yourself over the last few months, I think it's reinforced a belief that this is a really, really solid process, and this is the future of investing. So when we talk about the future of investing, the world is moving in this direction. Yeah, if you're not one of the first movers, then you might just get left behind in the race. And that's the way I look at it.
Awesome. Well, thank you to both of you. And hopefully in this short video, we've tried to explain how you can now use technology to safely and simply invest in the alternative asset space. Cheers.
Thank you.